Welcome to the Tax Talks in 5 podcast, where each month we explore topical issues in the intricate world of tax law and policy in today's evolving global economy. Today's episode is brought to you by Redcliffe Training, the market leader in corporate finance and banking courses for over 25 years. I'm your host, Sharon Portner, and with me is Jeremy Mindell, one of Redcliffe Training's regular and outstanding senior lecturers in tax. We'll be delving into 5 critical areas of international tax, which Jeremy will be delivering this year. Hello and welcome to Tax Talks in 5, Jeremy. And let's start by hearing about the theme of your courses this year.
Thank you, Sharon. So the theme of my course this year for Redcliffe is very much on the international scene, with one exception. All of the courses are designed for companies and businesses that have interests in the UK and beyond. And there I'm looking at courses which go from the principles of taxation to the nitty-gritty detail in something like hybrids.
So what course gives you the theme of the series?
So the principles of international tax very much looks at how international tax differs from domestic tax. It introduces a number of the principles. It looks at double taxation. It looks at, for example, transfer pricing and other elements. So it's an invaluable guide for anyone who's entering into the world of looking at international tax. And it looks at the themes, not just double tax treaties, but also the base erosion profit shifting project, now 10 years old, which has reshaped the world of corporate tax.
Jeremy, can you tell us what is Pillar 2 about?
So Pillar 2, in a nutshell, is an attempt to create a global minimum corporation tax rate of 15%. And about 140 countries have signed up to the inclusive framework, which would put this into practice. And indeed, a large number of countries have put it into their domestic legislation. So, for example, the UK, in common with many countries, made it effective for accounting periods beginning on or after the 31st of December, 2023. The issue that there now is that President Trump's administration seems to have chucked a very big rock into the Pillar 2 pond, and we're still working out the ripples from that. And it will be interesting to see, because Pillar 2, in terms of creating this framework, has a lot of momentum behind it. And we will need to see how the Americans effectively pulling out of Pillar 2 may affect this in the future. But the assumption I would have is that a global minimum tax rate of some form will continue and will need to be accounted for by corporates, particularly in terms of their reporting. I think a lot of corporates will find that they're not paying a great deal of extra tax, but the administrative burden will be much greater.
Now, there's another course you're running, a day course, Tax Issues in Management Buyouts. Could you tell us a little bit more about that?
So with tax issues in management buyouts, you're looking at it from the perspective of the company that is selling out, the management which is buying in, and potentially the sources of finance which are used in order to fund the buyout itself. And this could be either on a purely domestic basis or on an international basis. Management buyouts are very popular. They have considerable tax consequences, not just in terms of the buyout itself, but also in terms of any reward structure that you may have for the management. And this course looks at those in some depth.
Tax Issues in Research and Development. Could you just expand on that course for us?
Well, that's the one exception which is much more of a domestic theme. A lot of countries give tax breaks for research and development. The UK's breaks have been around for about 20 years and have become more generous as the years have gone on. Well, at least until HMRC and other government bodies, such as the Office for National Statistics, woke up to the fact that actually the tax reliefs were being overclaimed and probably misused. So there's been somewhat of a crackdown by HMRC, enforcement action, new regulations, new compliance requirements, and indeed, in certain cases, arrests as well. So when I look at that, I'm looking at how to make a successful R&D claim in the new environment.
The Global Mobility Solutions, the tax issues. Can you talk us through this course?
So Global Mobility Solutions is, if you like, the mirror image of the principles of international tax. Whereas the principles of international tax goes through the corporate elements, here we're looking at the employment taxes and the individual elements. Where a company is looking to send somebody abroad, there are issues both in terms of tax and social security. And there are the interests of the company, the employee, and indeed the tax authorities' interests to take into account. And this doesn't just look at the compliance obligations, which have grown more onerous, as you might expect, but also at the planning opportunities, because a well-planned assignment could cost half the amount of tax and social security that a badly planned assignment could cost. The stakes are that high on that basis. So I go through some of the principles, look at tax equalization and protection as well, and therefore the way that you might successfully plan an assignment or international relocation.
Lastly, can you please unpack the complexities of hybrid mismatch, the title of your 5th course?
Well, hybrids are an area which again has become a live issue following the BEPS project and the UK's implementation of the legislation. The principle, which was recommendation 2, was easy enough to enunciate. The practice has been a bit like producing an old British Leyland car, in that the first lot of legislation was not correct. And even when it went in for reservicing, it didn't work very well. And there have been a number of successive finance acts which have tried to make this more coherent and work better. International operations can often have hybrids, both in terms of if they span 2 or more countries, what is the tax treatment of them? In particular, if they expand into the United States, the different tax treatment, will it lead to particular hybrid issues? You could have something which is deductible in one country but not included as income in the other, and that leads to what is known as counteraction to stop you getting an artificial tax advantage. The important element is to identify the potential issues and then to see how to deal with them. As with most things, planning is key.
Thank you, Jeremy, for sharing your expertise with us. And just to recap on the 5 lecturers you'll be covering this year: International Tax Principles and Pillar 2, Tax Issues in Management Buyouts, Tax Issues in Research and Development, Global Mobility Solutions, the Tax Issues, and Hybrid Mismatch. Now, if our listeners would like to book or need more information about these courses, how should they contact Redcliffe Training?
Well, they should go onto their website, www.redcliffe.com, and look at the range of courses there.
Great. Thank you, Jeremy.